This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, April 6th, 2016. Euro dollar. So clearly there are signs of the euro potentially topping out in recent trade after the market put in a 2016 high at 114.38 in the previous week. But at this point, it's going to take deeper setbacks for the market to really strengthen this outlook and put the pressure back on the downside. Ultimately, we're going to need to see a break back below 11.45 to really strengthen this outlook, while a break and close back below recent support, which comes in around 13.35, would be required to at least at a minimum get things going to the downside. Until then, the pressure still remains on the top side, and there is risk for additional breaks above 14.38 and towards the 115 area further up. Ultimately, though, medium-term resistance is very strong up towards 115, and any rally should be very well capped. Sterling dollar. So cable remains under pressure with the market focused on a retest of recent support at 140.53, which guards against the more critical 7-year low from earlier this year at 138.36. At this point, rallies are expected to continue to be well capped, with only a break back above 145.15 to really delay the immediate bearish outlook. Dollar yen. So dollar yen had a significant day on Tuesday with the market breaking down and closing below previous multi-month lows at 110.67. The break also resulted in a break below the critical psychological barrier at 110, and this now exposes deeper setbacks over the coming days and weeks, potentially down towards a measured move in the 106.50 area. At this point, it'll be interesting to see how the market reacts to this latest break below 110, but any rallies now should be very well capped towards the 112 handle, with ultimately only a break back above 114.87 to take the pressure off the downside. Euro Swiss. So Euro Swiss has been comfortable consolidating over the past several weeks, so the market is starting to track lower towards the lower bound of this range. At this point, setbacks should be supported towards that recent low at 108.10, with only a break back below to delay the broader recovery outlook. And instead, we should see the market supported in favor of the next break higher above 110.24 and towards the recent multi-month high at 112 further up. But again, if these setbacks do persist and we see a break below 108.10, this could threaten and compromise the recent recovery outlook in Euro Swiss. Aussie dollar. So Aussie has been showing signs of topping out over the past several sessions since posting a fresh 2016 high at 77.23 in the previous week, and it'll take a break below 74.77 to really strengthen this toppish outlook and accelerate declines, potentially taking us back down towards the 72 area. At this point, any rally should be very well capped, while only back above 77.23 would negate this current outlook of potentially seeing this market top out. Dollar CAD. So dollar CAD is showing signs of a bottom, with the market potentially putting in a double bottom formation as it approaches key neckline resistance at 132.96. At this point, a break above 132.96 would confirm that trigger and open the door for a move up towards the 137 area. Still, while the market holds below 132.96, the pressure does remain on the downside, and there is risk for a breakdown back below the recent 2016 low at 128.58. Kiwi dollar. So Kiwi has done a good job pulling back from recent 2016 highs at 69.67, and overall the market continues to show formidable resistance into that medium-term resistance area above 69 and ahead of 70. At this point, there's risk for deeper setbacks towards next critical support at 65.46, which guards against the yearly low at 63.47 further down. Only back above that recent high at 69.67 and really above 70 would compromise the medium-term bearish outlook for Kiwi dollar. SPX 500. So the S&P 500 has been showing signs of finally wanting to stall out after racing up to a fresh 2016 high at 2080, but it'll take a break below recent support at 2021 to strengthen this outlook and accelerate declines. But a break back below 2021 will do a good job of opening the door for a potential retest of that February 2016 low at 1808 and confirm the potential for a medium-term lower top at 2080. Again, we're a ways away from this at this point, but so long as the market ultimately holds below 2100, the outlook is for some form of a meaningful medium-term lower top below that record high from 2015, ahead of the next major downside extension back below 1808. Gold. So gold has been consolidating in recent trade, but doing a good job of consolidating above some previous resistance now turns support at 1190, and overall the outlook is now shifted to the top side, with the market eventually favored to break higher back above the 2016 highs in the 1180 area, in the 1280 area, and towards 1307, which represents the 2015 peak further up. At this point, only back below 1190 would compromise this newly adopted constructive outlook for gold.